Wall Street is running a massive psychological operation on retail investors, and the latest data proves it. While mainstream headlines were screaming that crypto was dead and retail traders were panic selling in a bloodbath, the single most powerful banking giant on earth was quietly backstabbing its own public narrative. JPMorgan just dropped a bombshell SEC filing that changes the entire game. They aren't just dipping their toes in cryptocurrency anymore. They are aggressively moving in, staging a massive multi-million-dollar institutional accumulation right under your nose.
Let's look directly at the cold, hard numbers from the firm's latest official Form 13F filing. JPMorgan's exposure to BlackRock's iShares Bitcoin Trust, or IBIT, didn't just grow, it absolutely exploded. Back in December, the bank held a comfortable 3 million shares. Fast forward through the first quarter of this year, and that number skyrocketed by a staggering 175%, landing at a massive 8.3 million shares. At current market valuations, this puts JPMorgan's direct institutional bet at roughly $390 million. The timing here is calculated perfection. Wall Street loaded the boat at the exact moment retail investors were shaken out during the recent market correction. This isn't emotional trading. This is smart money, establishing a definitive, multi-billion-dollar market floor. Bitcoin has already shown historic resilience, completely absorbing the shockwaves after sliding down to the $62,000 range earlier this year. And JPMorgan is far from the only giant expecting an explosive macro move. Global fund managers are turning hyper-bullish. In fact, VanEck's head of digital assets research, Matthew Sigel, sent shockwaves through the financial sector by predicting that Bitcoin is on an undeniable trajectory to cross into seven-figure territory, hitting a mind-blowing $1 million per coin within the next half a decade. But before you go all in, you need to understand the immediate danger zone. A massive clash of titans is brewing behind closed doors. Veteran investor Michael Terpin, the legendary figure CNBC calls the Godfather of Crypto, is issuing a severe structural warning. Terpin predicts a brutal short-term liquidity flush before the ultimate rally. He warns that a final capitulation could violently drag Bitcoin down to the $48,000 mark by October, flushing out the remaining leveraged traders. However, look at the grand finale. Even a bear like Terpin agrees on the ultimate destination, maintaining his long-term target of $1 million per Bitcoin by 2033. What Wall Street knows, and what retail ignores, is that the entire institutional plumbing of finance has fundamentally shifted. Spot Bitcoin ETFs have created a seamless bridge for global banks to hoard digital scarcity without any operational friction. To make matters even more explosive, the historic Clarity Act is now moving into its final legislative stages. The moment this regulatory green light passes, an unprecedented wave of capital will flood the markets, potentially driving Bitcoin to face a supply shock that could ignite the biggest all-time high in human history. The battlefield lines are drawn. Will you follow the smart money buying the dip? Or will you stand on the sidelines waiting for Terpin's $48,000 correction? If you found this institutional deep dive valuable, smash the like button right now and subscribe to stay ahead of Wall Street's hidden moves.